We're on. Hi, everyone. I'm Dylan from the Starknet Foundation, and I'm joined by my colleague Damien. Over the next 30 or so minutes, we'll talk about DeFi Spring, the new installment, and how users and protocols can join the Starknet DeFi ecosystem. Damien, to kick things off, can you tell us about your role at the Starknet Foundation, the DeFi Spring program, and why we're discussing it today?
Yeah, that sounds great. Thanks for hosting this, by the way. I'm Damien. I'm one of the growth leads here at the Starknet Foundation. I'm part of a wider team that covers a few different verticals across the ecosystem. Specifically for me, I'm taking care of a lot of DeFi at the moment, and which is why I'm chatting to everyone here about the DeFi Spring program that's live. Yeah, we can dive into a little bit more in a moment, but my background's in corporate law. Before I joined Starknet, I was at a startup called Drift Protocol on Solana, where I took care of a lot of the market maker relationships on the project as well. So yeah, excited to chat more today.
Awesome. Thanks for the background. And just one other thing to add, it's a very good coworker as well. But let's jump in.
I'm part of a great team.
Yeah. Earlier this year, DeFi Spring distributed 14.4 million Stark token to over 100,000 users across 14 different protocols. Are there any additional insights you can share about its results?
Yeah, we have some great stats that would be great to highlight, I guess, off the bat. The program has been in place for about 16 weeks so far. And across 16 weeks, we've done 8 specific distributions. So that's 8 rewards to users. Across these 8 rewards, we've distributed roughly around 15 million Stark. I think that number may be a little bit higher now after today's distribution. We have a claim rate of about 86.5%. So that's around 12.5 million claimed by users. The total number of users we have actively participating in the program is over 100,000. We have like a cost of capital acquired, which is around $11.15 TVL for every dollar in incentives we spend across DeFi. And the total number of users participating in this program is increasing week on week. So we're very excited with how this has gone so far.
Nice, perfect. I'm sure we'll be diving into some of these stats and KPIs a little bit later in the call too, but maybe we take a little step back. Can you give me the elevator pitch of what DeFi Spring is and why should people care?
Yeah, that's a really great question. I think I'll answer this question perhaps from 2 different perspectives. The first is perhaps on the user side, right? At the core in any ecosystem, a user that looks to interact with DeFi looks for good execution, right? I mean, you might come to DeFi for the various reasons that it offers over centralized finance, but really you don't want to use DeFi unless DeFi offers you, at the very least, an execution that's on par, if not better, than what you can achieve elsewhere. Otherwise, you're practically just losing money. So specifically for these users, what DeFi Spring does is it provides incentives for liquidity providers to put their money where you're most likely to trade. And so when you're trading on Akubo or on Nostra or on any other DeFi protocol, you'll be able to trade with the best prices. So overall, as a net benefit, it's a net benefit for user experience across the chain. From the perspective of liquidity providers, right? So this is on the side of people that are actually putting their money to work. I would say that this is probably one of the most sophisticated incentive programs that's available at the moment. And there's quite a bit of edge for you as a sophisticated liquidity provider, if you know how to manage concentrated liquidity positions, to be able to earn an outsized amount of rewards compared to, I guess, your less experienced LPs. I'll dive into the mechanisms of how the program works in a moment, but at a very high level, the program values more productive capital, even if it's the same size, than less productive capital. So if you know how to make your same dollar or someone else's dollar work more within DeFi, you'll get more Stark rewards. And that's sort of why if you as a sophisticated LP want to participate, it's a great program for you to join in on.
Nice. And maybe you can get into a little bit more detail on some of the incentivizations for the LPs and how the program is operating a little bit. You were touching on it, but maybe we can get into a little bit more detail there.
Yeah. I mean, that's a great point. I might just take a step back before I tap into how the program works and just touch on the outputs of the program as a whole. So I would say across most L2s, execution is pretty good, right? Like if you look at Arbitrum, if you look at Optimism, you can probably trade orders of around $1 million with less than 1% slippage. On centralized exchanges, like that 1% turns into like a few bips, right? It's much tighter, much more efficient on centralized avenues. But decentralized options have sort of really come across only in this last, like, I don't know, since DeFi summer, right? In 2020, 2021. But Starknet as a network has probably only become quite functional and had an explosion in DeFi use cases in probably mid last year. And so we're starting from like a little bit behind, and we really want to chase up to where good execution is across other chains at the moment. And DeFi Spring as an output is meant to achieve that. So today, if you go on Avenue, which is like the premier trading venue for Starknet, you'll see that you can trade about 1 million in like one order for about 0.8% maybe in slippage. This is a huge improvement to where it was 6 months ago. So I guess, yeah, to take a step back, like that's what DeFi Spring sort of enables. And then how it enables it on a more mechanical basis is that it scores the liquidity provided by LPs on decentralized exchanges along this range. And that range starts from like extremely inefficient to extremely efficient. And where you land on that range depends on, I guess, where you land in that range depends on where you're putting your capital. We think that the most productive capital is most likely to be within this range where the asset has traded for the last 30 days. And so if you take the last 30 days of volatility of a particular asset and you're putting your assets within that range, then we're saying, hey, this is the most likely range that someone will come in and trade at. And so if you can do that, we score that towards the more efficient range. If you're putting like, I don't know, like ETH USDC in an ETH USDC pool, and you're putting like the range of your ETH price at like $100,000, right? Like you're putting your range of your ETH price at like $10. It's very unlikely that those ranges will be traded at the very least within this next, I don't know, few months, few years. And so we don't rank that liquidity very highly. And so even if you put in like $10 million there, we don't think that $10 million is very efficient. We don't think it's very productive, and we don't think it does a lot for the ecosystem in general. And so we score that much lower. And you can sort of imagine this applied across all the assets we have available, applied across all the decentralized exchanges we have available. And then you apply that across all the users across all those decentralized exchanges. And you get this like range of where people land. And then that's how users end up getting their allocation from DeFi Spring.
Cool. So there's a user focus element to it. There's a protocol focus element to it. Why is it important for both of them, both of those stakeholders? Why should they care about DeFi Spring?
Yep. It's a good question. Like, I think coming from a protocol perspective, right? Like if you're a founder in DeFi today, one of the biggest issues you'll face is this issue known as cold start problem in DeFi, right? DeFi protocols have a circular relationship between the exchange, its LPs, and its users, right? Users pay fees to the LPs. LPs provide liquidity to the exchange. Exchange lets users trade, right? It's like this circular relationship. When you start off, right, and you're bootstrapping and you're a team of 3 and you don't have that much cash and you put on this really great product and it's extremely well designed, how do you get these initial LPs? How do you get them to provide liquidity on your exchange when there are no users paying the money, right? The cost of their capital is not zero. And so they have to really consider their returns. And so this cold start problem is typically how a lot of DeFi innovation stalls, because if you don't have really large investors, if you don't have a really large bootstrapped team treasury that you can use to provide liquidity, it becomes very hard for you to kickstart this flywheel. So I guess for founders that are looking at this program, what I would say is Starknet specifically through DeFi Spring is putting a lot of value into helping you solve this dilemma. And we help you solve this dilemma by subsidizing the cost of bringing LPs onto your platform at the earlier stage, so that the value equation for LPs when they're considering, hey, should I come join, weighs a bit more heavily towards yes, right? And we specifically within the program, we have this mechanism in place where if you're a brand new protocol coming in tomorrow and you pass all of the requirements, right? Because we do have some requirements, you'll get a floor amount of incentives. So even if you have zero TVL, right, you don't have any users, you'll definitely get a base amount of incentives for you to distribute onwards to your LPs, so that your first few LPs that are coming in, they're going to get a much larger return on their investment than they would otherwise get on a different protocol. I know that's a very long-winded way of saying founders should really care about this program because it really helps you go to market.
Yeah. I think that's such a huge aspect, and solving, as you were mentioning, the cold start problem in DeFi, in pretty much every vertical, but especially in DeFi, it's a quite a unique environment. And maybe you can touch on a little bit about if you think that DeFi Spring, the first iteration, was successful. You were mentioning a bunch of the stats and KPIs earlier. Maybe you can kind of discuss a little bit about that, and what you believe as the key output for the first DeFi Spring, and if you were happy with the program. And then we'll jump into why there is a need for a second iteration and so on and so forth.
Yeah, that's a really great point. I would say that the North Star metric I'm looking at for this program is really on slippage paid on orders of size, right? That should be by far the North Star. A lot of other incentive programs look at more like vanity metrics like TVL, right? And TVL is important, like I said before, the cost of capital definitely isn't zero. So someone willing to put 100, 200, 500, $1 billion on your network, it means something. But what activity that TVL enables is a very broad spectrum, right? You could have a chain with hundreds of millions in TVL, but you as a user coming in looking to trade $100,000, you may still be paying a very, very large slippage, which just prohibits scale, right? If you're a borrow lend protocol and you're looking to liquidate 5 million in bad debt, or bad debt that's coming up, right? Or if you're a liquid fund looking to acquire any position of size and you're paying literally percentages of your entire stack to fees, it's not something that you would consider. So North Star is slippage rate. And so before DeFi Spring 1.0 started, I would say maybe around November, December last year, slippage on an order of $1 million on Starknet was enormous. I think it was anywhere upwards of 40%, right? And realistically, no one's actually going to trade for 40%, but it just means that it wasn't tenable for people to come in and trade at that size. I think today now, like I mentioned before, it's less than 1%. I think it's 0.8%, and that number gets better or worse depending on the asset price of Ethereum. But that's the main North Star that I'm looking at, and I think we can even reduce that by even more. We can go to 0.5%, 1/3%, 0.1%, and then ideally even less from there.
Yeah, I've seen kind of a huge increase in people coming into the DeFi ecosystem, and I think the North Star that you were mentioning related to slippage obviously has been improved quite a bit. So based on some of the the facts and stats that you gave in the beginning, some things that you just mentioned right now, it seems like the first DeFi Spring was successful, which is great. But then we're kind of on this conversation because the foundation recently announced a second iteration. Maybe you could talk a little bit about the differences between the first iteration and the second iteration. What do you hope to accomplish that's slightly different than the first one? What changes have you made?
Yeah. So the first iteration of the program really focused on 3 types of projects. In order to qualify, you had to either be a DEX, right? So people put two-sided liquidity into a pool on your exchange, or you're a borrow lend protocol, so people deposited assets for people to borrow, or you're a perps or options exchange, so people put orders on the book or put liquidity in a pool for people to trade against. That went really well, and that's sort of I guess in DeFi, it's the core layer of DeFi. It's what you need to be really strong for these new primitives to be able to be built on top. DeFi Spring 2.0 wants to expand the remit of the program to the next level of DeFi above, right? What builds on top of this core layer of liquidity that now exists? And so we've introduced a new category of entrants that can sign up, and that's known as Phase 4 or just other. And these are primarily targeted. I know it's very creative, but these are
You
primarily
couldn't think of a
targeted.
better name than other.
I wanted it to be a catch-all, and so I didn't want it to preclude any particular project. But the idea for Phase 4 is that if you as a project, say you're a yield aggregation protocol like Nimbora on Starknet, for example, and what you do is you accept capital in, and then you put that capital to use to farm yield for your users in like an automated and managed way, kind of like against a pendle on mainnet. You're still contributing to DeFi, right? Like your liquidity isn't there so that someone else can trade against it. Maybe in some way it is, because it then eventually goes into another protocol. But your liquidity is still productive. You're still doing something for the ecosystem. You're still contributing to activity. You're still providing a product for users that want that product. And so that's what DeFi Spring 2.0 wants to capture. It's these new class of products. And if you look at how DeFi has sort of flourished across other chains, right? If you look at Pendle's TVL on mainnet, these aren't like one and done things. Like these are very core tenets of a successful DeFi ecosystem. It's a way for institutional funds and for large family offices to genuinely find a way to farm yield on their stables or on their other assets. And so we want to help enable that class of products to grow as well. And then DeFi Spring 2.0 is also it's really a message as well from the foundation to commit that we're, invested in this program, that if you're a project coming on tomorrow and you're looking to take advantage of this and use this as a resource to scale, we're not just going to cut it and rug. If you're an LP that's bridging over $10s or $20 million, this isn't going to disappear tomorrow. So with the announcement that we made, I believe a few weeks ago, what this program will now go till at the very least is 31st of December 2024. So we have at least another 6 months even from today. And then, depending on how it goes, like I can't speak definitively at this stage, but I would imagine that we would have some version of something like this existing even beyond that.
Now, I think it's a great program. You've put together, there's this tweet thread by Damien after the first iteration of DeFi Spring 1.0. It's a really good thread, and I've been stealing a lot of stats, which I'm sure we'll be talking about. We'll get into some of the TVL. We'll go into who the beneficiaries are, because I think that thread really goes into the benefits and some of the results that we saw from DeFi Spring 1.0, which gave us a reason to re-up it and bring it a better version that we learned from with DeFi Spring 2.0. But to summarize something that you said earlier, I guess there are 4 categories for participating protocols in 2.0, DeFi Spring 2.0. DEXs, borrow and lend, perps and options, and our market-approved name of other. Which protocols are actually participating in DeFi Spring right now? Maybe you can give some shout-outs. And then can you also discuss how new protocols can get involved?
Yeah, I would love to revisit the part you said about the thread that I put together, because there's a very interesting stat there that I want to cover in a moment. But I guess to answer your question, there's a webpage that you can go on right now. It's pretty simple. It's defispring.starknet.io. And it has a full list of all these protocols that you can participate on today and genuinely earn incentives starting right now. Incentives are distributed on a fortnightly basis. It will soon move to a weekly basis. So, if you want to test it out and see how it works, and you want to supply some liquidity on Nostra, for example, or on ZK Lend, and just deposit in some ETH or some Stark, or you have a general long ETH thesis, and you think Stark is an ETH beta, and you want to put some liquidity in ETH Stark and be able to still hold exposure to both sides there. You can do it on Akubo or MySwap or JediSwap. But that website is by far the best place to go to. And just by doing it for like the next 7 days, you'll be able to get your first tranche of rewards next Thursday. There are like
Before I'm going to hop in real quick, I will say the biggest change from DeFi Spring 1.0 to DeFi Spring 2.0 is the website and the design is pretty cool. So shout out to our head of design, Julian, who put the work in for that website. But yeah, anyway, going back to you, Damien.
Yeah. I mean, another thing to shout out is we on the website we had and really prominent like mainnet Ethereum NFT artist. His name is IMCMPLX, and he's the artist behind the OniForce collection. If you're a bit of like an anime nerd and like an NFT OG like I am, you'll know that they did like a huge collection back in the day. But we had him put together like these custom Starknet NFTs that represent how much Stark you've earned throughout the course of DeFi Spring. And so if you've earned like 100 Stark or 1,000 Stark or 10,000 Stark or 100,000 Stark, you can mint a different NFT that represents how much Stark you've minted. That NFT has zero value outside of the fact that it looks really cool. I don't want to lead anyone on and make you guys feel like that it's going to be the precursor to something else, but it's honestly just a really cool piece of artwork that I really enjoy.
Nice. Okay, so I'm on the website right now. I'm checking out. So we have some of the key players within the DeFi ecosystem: Kubo, MySwap, JediSwap, Nostra, zkLend. Maybe you can get into explaining what some of these protocols are doing, and then we can get into, I guess, the sales pitch for some of the other protocols listening in.
Yeah, of course. Okay. I might just go through them one by one. This is in chronological order on the website, which is alphabetical, so I don't want to give preferences to any particular one. But Akubo is, I think, the leading AMM DEX on Starknet, both by volume and by DEX TVL. The founder is a really talented developer called Moody. I believe his Twitter handle is SendMoods. And Moody moved over from the original Uniswap team to build Akubo, which is his own project on Starknet. I'd highly recommend you guys to check it out if you guys are looking to swap or trade or provide liquidity there. Then we have Stark DeFi, which is one of the OG protocols on Starknet. They're a Uni V2 AMM, so if you're looking to just provide two-sided liquidity for primary markets, that's definitely a good choice. You have Heiko, which is a Uni V3 style AMM. The founder is a really cool guy called Park, and they've incorporated a really interesting part into their LP strategy management. So usually for LPs, it's hard for you to maintain balance on both sides. They use, I believe, either an AI model on the back end or some strategy on the back end that helps you auto manage those positions. Of course, next we have Nostra, which is the largest DeFi protocol by TVL and Starknet in general. They sort of offer a full suite stack of services. They have the DEX side, and they also have the borrow-lend side. And I think soon they'll have the staking side. Man, it's going to be a lot to go through, but I'll try to zip through it. We have MySwap, which is another Uni V3 AMM built by the Bravos team, which is one of the largest wallets on Starknet. We have 10K Swap, which is another original Uni V2 AMM. We have JediSwap, which is, I think, the most original or the oldest project on Starknet. They're also a Uni V2 AMM and a Uni V3 AMM. And we have SithSwap, which is another Uni V2 AMM. On the borrow-lend side, the way for you to participate in DeFi Spring is just by supplying assets so that people can borrow those assets, right? You're providing liquidity in the market so that people can borrow them at reasonable rates. We have, I think, 4 players there that are quite interesting. We have Hashstack, which is an under-collateralized borrow-lend platform. We have Nostra, again, I've just mentioned. We have Vesu, which is a brand new borrow-lend primitive that's incubated by the Argent team, which is another leading wallet on Starknet. And they're coming out with some really cool stuff, so I definitely recommend you guys check it out. And we have zkLend, which is, I think, one of the most active and most used contracts on Starknet of all time. On the perps and options side, we have Carmine, which is an options AMM, and we have ZKX, which is a perps exchange. I do want to add a caveat, like all of these protocols I've mentioned, right? These are all protocols that are participating in DeFi Spring, So it means that they inherently have to be able to accept user capital for them to provide liquidity on their exchange. There are other DeFi protocols on Starknet that are excellent, that have a huge amount of market share, that give users an extremely good trading experience, that aren't captured solely because they don't have any liquidity providers on the exchange. So for there, I want to shout out Avenue, which is the leading aggregator on Starknet, and Fibrous, which is, I think, the second leading aggregator on Starknet by volume. Both of these guys offer best execution on trading any asset on the chain. And so they have complex routing algorithms that go between different pools to figure out where is the best way I can most efficiently execute my trade. So I definitely just, I guess, for leisure, ask you guys to check that out as well.
Awesome. I mean, nice work getting through all those different protocols pretty quickly. So yeah, that was quite impressive. You know, I'll just say, like, there's a lot of things happening and building within the DeFi ecosystem on Starknet. We're looking to get more and more on board too, and you know, I think that's part of the reason why DeFi Spring 1.0 and 2.0 right now is happening. I do want to double click on your thread again. You know, there were some really interesting stats and insights that I think we all learned from that thread. You know, specifically, maybe we can start off. You know, I'll let you lead the discussion on your Twitter thread that you made with some of the insights. But maybe, you know, one thing that I'm very curious about is who were the beneficiaries of the first DeFi Spring, because you mentioned some things on some of the OGs in Starknet or not, and who actually received some of the Stark incentives.
Yeah, excellent. Okay, so DeFi Spring 1.0 launched in, I want to say, February 22nd, right? At that time, TVL on Starknet was at this like 40 million, 50 million threshold mark. And I'm using TVL, the definition is the DeFi Llama definition, which is active capital within DeFi protocols, not dormant capital sitting in wallets or sitting on wherever else. This is actually like something that's in a product that someone uses, right? So we were at this 50 million mark, and then I think within like a month and a half or maybe 2 months of this program, we hit around 300 or 350 million in TVL. That in itself is really great, but I think what was really great about it is that it came at a time in the network where the network had just gone through the token generation event, right? I think the network had distributed close to somewhere around 900 million Stark tokens, of which anywhere between 700 to 800 was claimed within the first short period. And so it's a huge amount of injection of liquidity, and that liquidity has to go somewhere. Very rarely, I mean, I'm sure a small portion of people held onto that liquidity and decided to just keep it within their wallet. But if users don't have something to do with the, I guess, the tokens that have been distributed to them, they're going to find something to do with it, right? Whether they send it to a centralized exchange or they sell it, or I don't know, they do whatever else. What this program did was it gave many avenues that directed users towards to go try, so that on like receipt, they could now explore like all these various protocols and be incentivized to explore all these various protocols, so that we could convert as much as possible of that token generation event. I guess that's part one. Part two, on your question about who this program most benefits, I think it's natural to assume that an incentive program is largely dominated by a small amount of very large wallets, right? A few people come in, they put in an outsized amount of capital, and they take an outsized amount of the rewards. I think because of the way we've designed the program, like how we've more heavily weighted incentives towards pools that are more volatile and require more risk, and how we've weighted incentives towards liquidity that's actually within a range that's most likely to be traded, it's meant that we've had a much better distribution of users that are receiving the incentives. So a few quick stats. The top 20 wallets by size in DeFi Spring. So these are, if we categorize all the wallets by how like the assets under management they have, if we categorize the top 20, these top 20 only make up 19% of all the Stark that's been earned across DeFi Spring. So you would imagine that these really large whales would most likely take at least, I don't know, 50, 60, 80% of the actual incentives distributed. But in this case, it's like less than 20%. And then this remaining 81% of incentives, right? Like the vast majority of what we've distributed so far, that's split amongst 106,000 users. And these 106,000 users range anywhere between 100,000 and wallet size, all the way down to like a few hundred or a few $1,000s. So this sort of goes back to the point once again of, if you know how to manage your liquidity and you're a bit more familiar with DeFi, you don't necessarily need to have a very large book to be able to earn an amount that's competitive compared to the other opportunities you're currently seeing.
Nice. I'm reading the thread. I'm going through it right now. I'm picking out some things to discuss. I think we should have it. Let me see if I can add it to the chat on Twitter. But it's a great thread. He doesn't come out of his Twitter hibernation that often, but when he does, it's just pure alpha. Okay, so I'm looking at some of this stuff right now. I find the TVL insights quite intriguing, actually, especially that Stark was not the majority of Starknet DEX TVL. Instead, it seems that the majority was in ETH and USDC, with Stark actually at 23%. Could you give us what does this mean, and what can we take away from it?
Yeah, that's a great point. So I think what I was trying to really illustrate with this particular tweet was that it's easy to draw up the increase of a network's TVL by reference to its token generation event, right? Like, oh, you guys have increased, 100 or 200 million in TVL. Like, obviously, you've just given away, 600-700 million worth in tokens. And these people have just then moved that into an application. I think what this tweet illustrates is that that's really not the case, right? There is a large portion of TVL in Stark. I think that specific amount was around 30 to 33%. But that Stark is not the majority of TVL on the network, and that's pretty much by design, right? Like if someone came in tomorrow and put an outsized amount of Stark into the various pools, the APRs for the Stark pools will drop, which then, with reference to the APRs on the ETH pools or the USDC pools or the Wrapped Bitcoin pools, they'll look much more attractive for the risk you're putting in, and the people will move into those assets. And so really the design of this program was to create a balance across the assets within the network so that there is diversity in what people can trade, but also depth in the diversity that they can trade. There's no point someone being able to trade $10 million in USDT if they can't swap in and out of a few $1,000s of Ethereum, right? And so that's what that chart was mainly trying to show. It's that the TVL is very well distributed. It's going to continue, ideally, to be well distributed. And if any particular pool becomes overbalanced, we'll draw them back in so that they become more balanced over time again.
Awesome. Any other insights that you want to share there? Otherwise, I think we do have a good question from the audience on YouTube, actually. If you want to answer that as well, I can read it out. What future initiatives or extensions are planned for the DeFi Spring program? I do think we've covered a little bit of that. We can summarize very quickly if you'd like. But then I think the key thing here is, how do you envision the long-term development of DeFi on Starknet?
Mm-hmm. Yeah, that's a really great question. I think incentives is a really spicy topic, right? You ask 10 people and 10 people will say 10 different things, and one of the things that most likely will be said is that they don't work, or that the liquidity isn't sticky, or that incentives will leave after a certain period. I think across all industries, right, there is a certain threshold at which companies are willing to pay for the acquisition of a user, right? It may not be $100,000 for a user, right? Or it might be, depending on what your margins are, but there's definitely a level, right? And in DeFi, that level isn't zero. The activity that users generate, the liquidity that's available for people to trade, there is a price at which, if you pay for them to do that, it's actually a mutually beneficial trade for both sides. Right now, DeFi Spring is getting about $11 per dollar of incentive spent. And I think that's going to draw down over time as this program goes on. But I really want to figure out at which point does the trade start turning away from the network and going towards farmers, right? At which point do we have enough liquidity? Are spreads tight enough? And at which point now are we just sort of overspending for this output? We're definitely not there yet, but I want to experiment more with the program to see what we can do to get there quicker, and then what we can do after that to either tackle a new area that would be quite interesting, or to figure out a different way to maintain this in a sustainable fashion. That sounded a bit airy. I will give a firm answer. I will say that a really interesting area that I envision to be tackling soon after this is on the activity and the taker side. So DeFi Spring is very much just for liquidity provisioning, right? It's for if you put money into an application for people to trade. But what about the people trading, right? What about the person who's actually, moving the 100,000 or the 500,000 or the $1 million on chain using your network, using your applications, and who are actually paying those fees? What do they get? I think the answer also shouldn't be nothing. I don't think the answer should be more than the fees that they pay, because then otherwise the value equation is you'll just wash trade volume to get incentives. But the answer is somewhere in between there. And so I think that'll be a really interesting next initiative. I think we have really innovative protocols on Starknet, and we have really exceptional and really excellent founders. I think with the right program in place that isn't frivolous, we can introduce an extremely interested class of people to a next generation of technology that they would actually stay and use once they realize that it's actually pretty good. And I could talk at lengths about what those protocols are and who they are on our network, but I think a lot of times people just need that small push to get there. And that's what I want DeFi Spring and the next iterations of DeFi Spring to be. It's that vehicle to push people to interact with these excellent protocols.
Perfect. Yeah, and I'll just add one extra thing to it. We see a lot of teams that are coming into Starknet, just given the nature of our position at the Starknet Foundation, some of the grants that we receive, some of the projects that come up to us asking how to build on Starknet. There's some really cool things coming up, and I think people have seen what the ecosystem has kind of positioned itself, especially with DeFi Spring, and I think we're getting a lot of innovation ongoing with it. So anyway, let's close this out. It seems like DeFi Spring appears to excel in a few different areas. Would love for a conclusion on DeFi Spring, what you see as some of the key areas, and then we can wrap it up afterwards.
Excellent. Okay, I'll end with a call to action of sorts, right? I think this program is an excellent tool to help new DeFi projects bootstrap their first 5, 10, 100 LPs and their first 5, 10, 100 users, right? If you're a DeFi protocol and you're perhaps built on another chain, or you're perhaps built on, I don't know, anywhere else, and you're struggling to find that product market fit at the earlier stage, consider coming over to Starknet and taking advantage of this program and seeing if that helps, right? Incentives are never going to solve PMF, right? Your product has to actually be good to begin with. But if you think your product is good and you need that extra kick, that's what this program is here to do. And I don't think there's anything else like this across any other ecosystem at the moment. So if you want that help, like, we're here to help you. And then if you're I guess like a yield maximizer, right? If you're someone who's savvy and is trying to look for a return on your own portfolio, or perhaps a portfolio you're managing, I would say that the yields as they are right now, it's going to change tomorrow, it's going to change next week, it's going to change in a month, but the yields as they are right now is the best that you'll see across any ecosystem, right? You can get like ETH USDC yields of anywhere up to like 40-50%, and if you do some savvy stuff and you lend some ETH and you borrow some USDC and then you deposit it somewhere else and you borrow it again, like, there's a lot of things you can do to really multiply your returns on the book that you have. And so if you're, if that's what you're looking to do, I would say that this is a really great place for you to start exploring. I'm very willing to help you take a first look or point you towards the right direction of where you should first look. But the trade that's available here is definitely not exhausted right now. So I would ask you to take a look at that as well.
Perfect. All right. You guys are all heard Damien. Come check out DeFi Spring. Start building. Start playing around on Starknet. I just want to thank you all, and we'll see you in the next episode about DeFi with Starks and Bitcoin. Thank you.
See you guys.